In 2025, Tesla's total revenue fell from approximately $97.7 billion to $94.8 billion. And net income attributable shareholders fell from approximately $7.1 billion to $3.8 billion. Wait a second. If Tesla is entering to a new era of artificial intelligence, why are revenue and net income falling so sharply? That is where the case begins. Most investors look at Tesla and think of a future story: artificial intelligence, Robotaxi, FSD, Optimus, autonomous vehicles, a company that no longer wants to be seen only as a vehicle manufacturer. Tesla says it is focused on bringing artificial intelligence into the real world. It talks about FSD, it talks about Robotaxi, it talks about Cybercab, it talks about Optimus. But I did not want to stay only with that narrative. So I went into Tesla's latest 10K and no, it is not light reading. It is a legal, financial, and technical mountain. But there, between lines that many people skip, I found a tension that changes the question. Because one thing is the story of the future, and another thing is the business that still supports today's numbers. Look at the first clue. The automotive business, which is still a central piece of Tesla, also showed pressure. Automotive sales revenue fell from approximately $72.5 billion to $65.8 billion, a decline of 9%. And Tesla explains that this was due to an approximate 8% decrease in cash deliveries and a lower average selling price per unit. But the important line does not stop there. The filing also mentions sales mix and higher customer incentives, including attractive financing terms. So the question is no longer just, is Tesla selling cars? The more interesting question is how much of that sale is being supported by price, incentives, leasing, and financing. Now, be careful with this part. This does not mean Tesla is not selling. It does not mean the brand is destroyed. It does not mean demand has disappeared. But it does show that demand does not live in a vacuum. Demand depends on price. It depends on interest rates. It depends on inflation. It depends on energy costs. It depends on customer liquidity. It depends on whether the buyer can finance the vehicle. And that is exactly what the filing warns about. Tesla operates in a cyclical industry, an industry sensitive to changes in consumer behavior, politics, regulation, inflation, interest rates, and competition. That is the part the headline usually does not tell you, because it is easier to say Tesla is AI, Tesla is Robotaxi, Tesla is the future. But the filing asks something simple. What is happening with the core business? And here comes another clue. Total automotive gross margin fell from 18.4% to 17.8%. By itself, that is not a dramatic decline. But when you combine it with lower automotive revenue, a lower average selling price, incentives, and lower regulatory credits, the story becomes less clean. Automotive regulatory credits also fell. They went from approximately $2.8 billion to $2.0 billion, a decline of 28%. That matters, because regulatory credits can help margins, but they are not the same thing as selling more cars to end customers. So the financial investigator separates the pieces: real sales, average selling price, incentives, regulatory credits, margins, and demand. They are not the same thing. The simple version says Tesla sells because demand is strong. The filing shows a more detailed version. Tesla sells, but price, financing, incentives, interest rates, and regulatory credits also affect the story, and that is where the reading changes. But this case is not only negative, because while the automotive business shows pressure, another part of the filing is moving in the opposite direction: energy. Tesla deployed 46.7 gigawatt hours of energy storage products in 2025. Energy generation and storage revenue increased from approximately $10.1 billion to $12.8 billion. That is 27% growth. And energy gross margin increased from 26.2% to 29.8%. Look at the contrast. Cars under pressure, energy growing, automotive margin falling, energy margin rising. The story starts to change shape. Maybe Tesla is not just cars. Maybe it is not yet a pure AI company either. Maybe the filing is showing a company in transition with several stories happening at the same time. But here, we also have to be careful. Energy is not a magic solution. The filing warns that the tariff regime may have a relatively larger impact on energy than an automotive. And it also mentioned that tariffs, incentives, and battery costs can affect prices and demand. So once again, there are two readings. From the optimistic side, energy could be a strong piece of Tesla's future. More deployments, better margins, Megapack, Powerwall, energy storage, and potential demand linked to the growth of electrical infrastructure and artificial intelligence. But from the skeptical side, energy also depends on sales, tariffs, logistics, costs, projects, and timing. It is not a magic line. It is an industrial operation. And that brings us to the big question of the video. Is Tesla a cars story? Is it an energy story? Or is it an AI story? The filing shows all three at the same time, and that is exactly the part can confuse the market. Because if you only look at the AI narrative, you can ignore the revenue fell. If you only look at cars, you can ignore the energy is growing. And if you only look at energy, you can ignore that the business has risks tied to tariffs, batteries, and execution. The crowd wants a simple story, but the 10K does not deliver a simple story. It shows a company with cars under pressure, energy growing, AI as a future promise, and margins that still depend on the real business. Here is the point. Tesla may be building a massive story around artificial intelligence, Robotaxi, and Optimus. But the filing forces us to ask whether the current business is already supporting that transformation, because a future narrative needs something very basic to survive: revenue, margins, cash flow, real demand, and execution. Remember this. Tesla is not one single story. It is an automotive company with revenue pressure. It is an energy business that is growing. And it is an artificial intelligence bet that still has to prove how much it can transform the numbers. The headline tells a simple story. The filing shows a company in transition. The crowd sees the future. The financial investigator asks whether the present can already pay for it. This is Renzo Market Lab. We do not follow narratives. We audit the numbers.